All right, good morning, guys. Welcome to today's trading session. It's Thursday, May the 11th, and we're here to talk about trading gaps and how to identify the gaps, how to identify trade setup, and what to look for. Um, if you haven't watched the previous video about market profile, we discussed a lot of different things from the market profile standpoint. So the first topic that I want to cover in detail is gaps because every single day um, there's going to be some sort of gaps, and there are different types of gaps. There's a gap in price, there's a gap in value, there are intraday gaps, um, and so forth. So that's so many types of gaps that I can't even name it. But I will want to focus on building from the market profile training that you guys participated, and we're going to use that as a source of information to build our learning curve and take our trading to the next level. With that being said, let's talk about gaps. All right. So when you look at a typical chart, you're looking at a chart like this with candles. Um, I highly recommend people to in TradingView, for example, you know, you can set up what you want to see. And here you can see what is electronic trading hours, which is the 23-hour trading day. And then you get the regular trading hours. My best recommendation for you is to switch over to regular trading hours when you want to identify gaps. And the first thing we need to do to identify gaps is we have to split the sessions. And it just happens that we have a couple of gaps here that we can talk about. So not sure if you can see clearly, but there's lines here splitting up the different sessions. So let me change the line session break, and I want to make it probably a little lighter. So this is the session break lines. You can see them right there, and um, we're gonna start talking about that and how is that coming into play when we talk about the identification of gaps. For example, today you can see here this indicator that I got here, which is called Gap Finder. You see the source code. Sorry, the script is right there. This person, uh, customizable Gap Finder. You can always go back and find it there. So this one, what it does is it looks for gaps anywhere that there is a gap that is unfilled. So that's what it looks for. And you can see that today identify a gap right here. So if you go and map out yesterday's high, right, and yesterday's low, technically speaking, there's no gap. You see right here, price is inside yesterday's range. So there is no gap. However, most of the people will tell you, "Oh, we're gapping down today or we're gapping up," whatever the case may be. Yeah, so that's a gap from settlement or a gap from the closing time. A lot of people look at it that way. We close right over here uh, in this zone, 52. That was the closing. 54, I'm sorry, this was a green candle. So it closed on the top. Uh, which closed at 54. So, and we traded down to the low of the candle. So what this gap identifier is doing is telling you that there is a gap right there because we are below yesterday's closing price or yesterday's low, whatever you want to call it. or yesterday's close. My bad. Sorry. All right. So you can see that identifies a gap, and that's what most of the people would refer to as a gap. However, um, from the market profile standpoint, this is not a gap because we have traded in here before. So you can see this is a session from yesterday, and um, we have traded. This is the session, and there has been trading going on uh, in that particular session here. So there's no gap in here. However, people will tell you that. All right. So let's try to find a true gap, what we'll call a true gap. See, there's a gap here, and that gap has been filled, so this indicator doesn't extended. There's a gap here. So this is a gap that started on Friday. This is the session from Friday. This is a true gap because if you go and map out the session, you had the session high, session low from the day before. Price open above the high, and that creates a gap. So you have a gap here. This is the technical gap. Instead of this whole entire zone here, it's just this portion here. And I'm gonna change not gonna change the color because it's gonna change the color for everything. So this is the gap that we have here. So now we're gonna talk about targets and we're gonna talk about everything and how to read it. So once you have a gap identified, you have a high and you have a low, just like everything else. Gap high and gap low. So this is a let me mark this gap right here. So this is the gap that you have, a 12 and a half points gap, high and low. Hope everybody's following so far. So what you see here, having a high and a low. Uh, I also like to draw the midpoint of a gap, which is extremely important because when you're looking to trade, this will come really handy, okay? All right, so we had the midpoint here, we had the high, we had the low of a true gap up that happened on Friday. So we have a gap below us right here. So let's fill that with uh, some sort of green. So that's a gap here. I believe we have a true gap above. Let me take a look
Order
at this.
submitted.
Took a look at a session here, low, high. That's why I don't like changing the boxes because it changes on everything. So I'm gonna clone this box and I'm gonna bring it up. And this is a true gap down. So if you take a look at this session here, and the low was made right here. Price opened here, so that is a gap. And you get the points here. This one I don't really need to write the midpoint because it's so small. But we have a gap above it. Extend that one out. and then we change this. Don't worry, guys. I'm not gonna make this training about how to find a gap, but that's part of it because I don't know everybody's uh, understanding of certain things. So we're gonna make it a little reddish. Okay. Then we have a gap above and a gap below to fill. This is yesterday's high, so I'm gonna delete that line so I don't get confused. This is the low, so I'll delete this line so I don't get confused. And we have a gap here. This is not a true gap. This is a true gap. This is a true gap. So we're trading in between gaps. That's why the market is a little bit in consolidation.
Order filled.
If you can see, this gap happened right here. If you extend this out, it just give you a nice trading zone. That's what we talked about the other day about fading the extremes of the zone, because what's going to happen is um, we have been talking about 41.63 for a little while. So the moment you break above 41.63, which is right here, and you can see how 63 was the uh, resistance. So this is 63 right here. So you can see what 63 is gonna give access to, and oh 08 and 20. That's why you guys, when you look at the plan, you look at today's plan, for example, uh, we got we got some targets, but when you look at the weekly plan, more importantly, this is where a lot of the information comes from. So I want you to know where the information is coming from so you don't get lost. And I hope people take advantage of this because, I sacrifice my own trading to make sure that you guys get good information. So we get this here. So look at the targets for the week. We got pivot at 41.50, right? Which is where we at right here in this zone. You see where we gap. This is where pivot is today. Then we have some targets here. So below pivot, let me mark the pivot zone here, 41.50. That's what I gave you for the week, which is right here, 41.50. So I gave you 41.88, which will cover this gap, right? 41.88 will cover this gap here. It'll be gap fill, 88. Let's see if I can mark it in okay, 41.88, whatever. 88 will fill that gap. I also gave you 42.20, which will be the center of this gap. And I also gave you 42.40, which will fill this gap. Not all the reasons, but you get the point. On the downside, I gave you 14. And remember, this was Sunday, okay? So Monday is right here. This is where Monday is. All of this is history, okay? Historical data. 41.14, 41.14. I gave you 41.14, which you can see how important that is or was. That was yesterday's low area. We got 41.14 over here. I also gave you 40.90. What 40.90 does is it takes you inside this gap here, which we already talked that this is not a true gap based on profile. But 90 will fill this gap, and then I gave you 61 and 61 will fill this is a true gap. You look at it in here, you can trace it back and find out when did that happen. And to know if it's a true gap or not, all you have to do is look for the high, look for the low, and if it's uh, this price came down here, but didn't quite fill. Actually, let me see. So the low of this candle was 61.25, and the high of this candle was 61.25. So this is technically a gap fill. So I remember we traded this. So this is not a true gap. It's just a settlement gap. Uh, so something to pay attention to. Every time you see a zone, I pay attention to it because you can see how price gets close to that area and it bounces. Anyway, so all right. So this is looking at a candlestick chart. Uh, this is where this information come from. Um, and very self-explanatory. Again, this is just RTH hours. That's how you identify the stuff, and that's how you draw your ranges. This is the range that we're in until proven differently. So now we have uh, all the sources of information that we have to include. All right, so let's take a look at that. Let's talk about it's a new TPO period, by the way. So you guys be aware if you're actively trading right now. But let's take a look and see gaps um, in the profile. How do they look? So I'm gonna pull this up. This is the my profile chart. Um, thank you. Looking good. So this is the TPO for all the sessions, including the overnight session. Okay. So what I do in this platform is that I just go and I just pick RTH hours. So now we are RTH hours. When you're looking at RTH hours, uh, you get different sources of information. And I want to talk about that. Let's wait until the volume loads. But I'm going to hide all the drawings so we can clean this up a little bit. And we're going to identify uh, the value area high and the value area low. This I don't see the volume loading quick enough, so I'm gonna have to probably. Oh yeah, let me. It's trying to load the volume, but let's use the TPO for example. Uh, so as you can see, every single day I write in here value area low, right? I write down value area high for the previous day and the POC. So those are the three data points that I look for from the profile. Every volume profile has a high, a low, and a POC. Every TPO profile has a high, a low, and a POC. Um, for TPO, for example, because the volume has not loaded, we have 4144 as the midpoint or as the POC. Uh, I know the halfback is a 40. Then this line here on the top, 4160, I know it's a TPO value area high. And I know this line here, 31, is a TPO value area low. All right, so let me bring back the entire session. It's a lot of work that goes into this, guys. And I'll show you basically how the trade setup will look like. This is the overnight session here. So for me, this does not really count right now. It's not important for me. So we're gonna focus on um, the other piece of information that is important, which is the RTH hours.
Order submitted.
So
Order submitted. Order
RTH
canceled.
hours are right here, this area here.
Stop
This
filled.
area here, and this is the one that's printing right now. So like I said before, you can see the volume profile here, and you can see where I
Order
got the
submitted.
50-day value area low. So when we open today, we open right around here, and I'm going to explain this to you in a chart, candlestick chart. We open right around here. You see the arrow there and the blue line. That's where we open, right around this area. When you look at the uh, value area low, let's find it again. I know I have it right here, value area low. I don't know why it keeps changing, but I know it was 23. Still loading. But so I don't get you
Order filled.
intimidated by looking at this chart. Uh, we're going to look at it in candlesticks because I don't want anybody to be intimidated by looking at the TPO stuff. So let's switch over to my other chart, the one that we were working on, which is this one here. And we're going to take a look and see. I can add my volume profile here so you can see how that looks. So this is yesterday's session here. And I'm going to show you how a trade setup looks like in this thing. So this is yesterday's session. So I'm going to add a volume profile here to yesterday's session. Okay. So I hope everybody follows me right now. This is the opening price right here. This is POC, value area high, value area low. So let's do this. Let's move all these lines. Opening price, value area high, value area low. So now we got 3 data points in here. 3 data points. So when we open here, you can easily say we have a gap down from POC. So if you have POC at 44 right here, you can say, okay, we're gapping down below POC. If you look at it in here, you can say we're gapping up from value area low, right? So gapping up from value area low, gapping down from POC. So when you look at the different components of information that I give you, for example, I shared with you this information this morning. I'm going to put this here. Normally my chart is like right up here. So you can see how the trend is before the market opens, right? So if we're gapping down from POC, again, this is not a true gap down scenario, but if you're gapping your POC on the top, you can trade this as a gap. And what you do for that is you look for a point of reference and say, okay, so if we have pivot at 50 and I'm opening at 41 and I got POC at 44, you got two options. You can wait until price hits pivot and take your short. You can do nothing, or you can look at it and say, okay, we're below yesterday's POC. So a trade in this particular scenario would be a short trade. And from the opening price, the moment that you cross, price is going to go up, or it did go up this morning for a little bit. If you can look at it right here, I'm going to make this bigger. We went up, we opened at 41.50. We went up to 43, and POC was at 44. The moment we traded below, back below the blue line, that's a short setup. And a short setup, the way that it looks is that you look for
Stop
a point of
filled.
reference to use it as a stop. I don't know if anybody wants to um, sacrifice or risk 11 points on an opening trade, but I won. But what I look for a point of reference to use it as a stop. So whether it is 49.50, so this candle here, probably we have used that as a stop, and that will give me 8.5 points. So that still is too much for an opening trade for me. So I will probably say I want to go above this candle here. Because if it goes above 46, it's likely to hit 50. And that's how you measure your risk, right? And you say, okay, so if we gap him down below POC, my initial target is going to be value area low. And it's right here. So you got yourself a 11-point trade. It's like risking 5. That trade hit fairly quickly um, for a short. Okay, so here's the other point of reference that you have to look at. Now you got to bring plan into the equation, because in a lot of cases, plan is going to give you information that is repetitive in the profile. So let's take a look at today's plan. If you look at today's plan, this is today's plan right here. First target was 40. So if I tell you the first target is 40 and we open at 41, the moment you trade below 40, 40 becomes resistance. So you automatically have a resistance level here at 40. And when you look at plan, I want you to think this way, guys. I know I have a lot of new people here, so I don't want to bore the ones that are being here for a while. But this is what you're looking at. You're looking at a zone that is 2.5 points above, 2.5 points below. So if I give you 35 here, let's just look at a real scenario. If I give you 40, 42.5, 38, 37.5, this is your zone. But you're coming into today knowing this ahead of time. Okay? You know this. You know one time framing from overnight session. You know that when we opened, we were heading in the downward direction. So this is 40 right here. So this becomes your zone, right? So the moment that you The moment that you trade below this level here, knowing that we're in a downtrend scenario, that just gives you a confirmation to target 30. 30 is right here. This is the value area. Uh, this is the value area here. So, uh, you want to think about it that way. Um, so, so hold on for 1 second. Okay. Um,
Order filled.
so here you have a zone, right? So pretty simple. It's a zone here that you have to keep in mind. And you want to do that for every single one of the levels. I know it's a little crazy to have too many things in your chart, but uh, you know, I don't like a lot of markings in my charts, but there's some things that you cannot afford not to have. Uh, so when you look at it from this perspective, you want to make sure that you are not just making the proper annotations, but also understanding what price is and where price is likely to go. Okay. So now that you have 30 here, 30 becomes a resistance point, same point that we have above. So 30 becomes a resistance point. Then you got target 14 here. 14 becomes a support zone for you because we already identified this, right? We identified this here and we talked about uh, that this was a true gap, okay? So we have a true gap here that it gets filled at 99, that area. So now if 14 gives up, you know where we're going. We're going to 99. We're going for that gap fill. So that's the way you want to think. So this is where we are now. As you can see, we're framing down. So until a candle breaks above 32 and a half and breaks the one-time framing down, uh, a long scenario is not safe. Uh, what do I mean by it's not safe? What I mean by not being safe is that it still favors
Order filled.
shorts, because the trend still is down. But again, uh, once you break above 30, then you bring a different scenario into play. And I always tell people you want to use the opening, 30-minute opening, as the way to enter the trade. Stop looking at uh, any other time frame. Uh, Easy for me to say because I'm not you, right? But um, trust your pivots, follow the one-time framing rules, like I have posted many times. Because what you want to see is you want to see this, right? This is what you want to see back up to 40. Because we're in a ranging market, right? It's ranging. See what's going on right now. This is why I love teaching in live market environment because I can tell you these things. See if this candle breaks that, it breaks the one-time framing down. So if the next candle opens, you can use 30 as your support, right? Everybody understand that part, right? I hope everybody does. I'm not watching the chat if you're typing, but look, why I was telling you about pivot, I mean, I got myself into a trade because I can't. If I see a pivot, I'm taking a trade. So, and because I what I do, and I follow my targets, right? So, NQ just got to pivot here, 70. I took it 41.10. Our trade didn't last long. So look, it broke the one-time framing down. So now we are into a balance. So balance looks like this. Assuming this candle does not make a higher high or does not make any new high, this candle looks like this. And I know that this is repetitive for people that know it because you guys hear me going through it many times before. So assuming we don't make a new high, 50% is right here, 28. So this is the zone that you're going to use as support, or you can use the POC of the actual candle as your support. See that? Sorry, I like yellow, guys, so it's hard. So 48, I thought it was the midpoint. 28, I'm sorry, 28 something. Get rid of that box. So this is your zone now. This becomes your support zone here. Because one time framing was broken, now it favors a long position, and that's when you start looking for long because now the game has shifted, and has shifted in a way that the market is rejecting these lower prices, and now it's trying to find uh, back into balance, and this is what balance is right here. Now, if you move the profile from yesterday to today, uh, you can see where we at. POs is right here, balance area highs here, balance area lows here. So now you can see where we at. We're trying to break above the value area high. So that's what I'm seeing right now. All right, so let's pick up back to the trade. So this would have been a nice opening trade. You already knew the target because I already gave you the profile from the day before, and we gap down. You want to apply the gap down concept. We gap down below POC, therefore the target is value area low. So that's called a rotation. So we're rotating
Order
back to
filled.
value area low. That's what we did. Um, so that's the way you want to think, and that's the way I look at it for me. Um, Let me double check the chat to see if there's any questions or anything before I keep going into the next. Okay, so I don't see anybody saying anything. Okay, good. All right, so let's move on from here. So now you have the framework. Hey, talk to you about the profile, talk to you about what to look for. So 11 points is a good
Order
start,
submitted.
buddy. And now you know the direction, because now you know how to identify those areas and so forth. So, um, so let's take a look at the other type of scenario. Uh, so I'm going to delete all of this here, and we're going to go and take a look at a different scenario. I'll take a look at a uh, cap down compared to value area or a gap up. So yesterday we have, let me hide this. So yesterday we opened right around here, right? Opened right around here. This was the day before activity. So you can see how tight this was. So here, because we have a very, very tight session, you have POC, value area high, value area low. Market opened at 62. Market opened right on top over here. You already knew 63 was a key level for me because I already told you that many times before. I think I even posted yesterday in the chat. So watch out for 63. So we'll open right around here. 63 already. Uh, so you got to make a decision. And I believe the trend was down yesterday. So we traded back down and we got to where? So we gap above value area high. So that's a gap up. When you're coming down, your target is value area high. If a value area high gives in, then its value area is POC. If POC gives in, then it's value area low. That's as simple as that. I don't know what else I can add to that. When you look at it from here, this is not a true gap down because the low was here, but it's still a gap nonetheless. Okay, gap in pricing. When you take a look over here, you go into the session and we gap up, and that gap is still open, like I said before. And the way you want to do it is the same way that I just explained it. You use the same point of reference. Let's just say, for example, uh, I hate to be the dead horse, but that's how it is in this business. We have to explain things. So here we are here fighting. This is yesterday's profile, fighting to get above or find acceptance above value area low from yesterday, which automatically will target uh, POC, which would be right here, 44. You got 50 as your pivot for point of reference, which is right below this candle right here. And now if it goes above 50, you know that it's going to try to go for 57. Now, let's just say, for example, we move up to 50. And the next opening of the next candle, let's just say that this is a candle here. And the next candle opens here, be mindful of that. Then whatever other candle opens over here, opening at this price, you can use this as your stop. Because you know that this is probably going to continue probably pushing back down, and you can use the top of this candle as a stop. So you want to wait until something gets up here and the 30-minute candle open. That's when you take your position. That's basically it in terms of gaps. It's really nothing to it, but you have to be able to read, what kind of gap you're having today. Is it just a price gap? Because what happens is, for example, in this case, that a lot of people will tell you we're gapping down. What you can do is, let me wait until the thing loads up. Sometimes this indicator doesn't load properly. Okay, so I gotta get less candles. It's too many candles according to the study. But what you want to do is, in here, when price comes back up, if it heads up this way, if the first target is 42, then the midpoint of this gap becomes the second target, and the top of the gap in price becomes your third target, which is right here. So you want to wait as long as you possibly can, because you don't know where price is going to head to, whether it's going to head to 43, or it's going to head to this, or going to head to that. So you want to be mindful of that. You want to wait and see what's going to happen. And you want to take your position at candle close or candle opening. You see this? So now one time framing has been broken. So we're not one time framing down anymore. We are in the balance zone that I was telling you about. And now we're going to look for targets, which is the top of this box, top of this candle here. This is the middle point, and this right here would be, technically speaking, what you're calling the gap fill. Simple as that. So yeah, so when you look at the profile, hopefully the volume has loaded by now, so I can show you this thing. Look at the TPO. Here's the volume profile right here. This is the previous day value area low, and you can see how the value area low will support right here. If you want to look at it in the footprint, you can see how that area was right here. See 41.23. Let me deactivate the right profile. See where I have 23 marked right here? I have 23 marked here. And if you took the position, you know, and you trusted this area here, understanding that we had two POCs here, that sellers got stuck around here, you took your trade here, and your target, it was probably going to be 40 because it's right here. 40 to 41 because you have a market generated information on the top, which is the opening price. You can clearly see that over here. But the target is 40. That's the target that I have selected for today. When I look at it in candlesticks, it's right over here. This is candlesticks right here. And then your pivots are right on top. You have pivot over here. You got a naked POC right at 49. And those that are not familiar with naked POCs, the POC of the 30-minute candle, not the session, not overnight or anything. It's just the 30-minute candle. Yellow line is the 50% of the first 4 or 5 minutes of trading, depending on your preference. The blue line is the opening price. So we have a new POC, the TPO that just opened. So now one time framing down has been broken. 32 or 30 becomes your entry. Unless you're looking to become a seller, which I will probably not recommend that at this point. Uh, you really either want to use 30 as a support, or you can use 40 for this zone right here as resistance until proven differently. But NQ is getting back to the open right now. Uh, this is the opening range high for 30 minutes, and then you get the pivots over here. If I was going to take a shot at a short, this is your best chance because the POC from the previous day is right here. Like I told you before, if previous day value area low is serving as support, naturally the target will be POC, which in some cases uh, coincides with one of our levels. So that's what the POC is there for. An acceptance above POC, then a target the value area high. And that's how the market profile generates, some visual references for you. And right now you're seeing a little rejection here because NQ just got to the opening price and the ES rejected. And the ES got to overnight low, which is this blue line here, is the overnight low. And that's where you see the little rejection there. So, so just to recap, so you're gonna have a technical true gap, which is when price open above or below the previous day low or the previous day high. And you have a gap in price or settlement gap or closing gap to the opening gap, which is basically just, it still is a gap, but it's just a settlement gap. Um, and then you can trade a gap on your value area high, value area low, and POC with the same concept as the ones that I just previously described. So those are the ways that you should be looking for opening trades to understand, where are we at, where are we going, and most importantly, what to look for in terms of targets, because that's when it gets really complex. When you don't know where to take profits, you don't know where to get out, and that's when people, move to stop too quick or whatever the case may be. So for me, that's about it. This class was not too long, 49 minutes, but uh, any questions, anything, anybody has any comments? Did you learn something or not? And this is the moment to ask questions if you have anything. Trust the process, guys. Trust the process. If everything is okay, I would like for everybody to just confirm, hey, we're good. Thank you so much. No questions, whatever. So I know. Um, No questions yet. Okay. All right. So if there's no questions or anything, I will just stop the recording here, and then we'll switch over to our Discord, and I'll just do streaming there, so we can do some live trading and see what's going on. All right, guys. Well, thank you so much for your time.